Hello and welcome to a new video on the HKCM Global channel. My name is Philip. Today I will be speaking about gold. Where is gold heading? What has changed since the last video on gold on this channel? What will be my projection for the upcoming weeks and months from now on? And I also brought along two other interesting charts, I think, to take a look at how is gold really performing in terms of inflationary hedges, in terms of how it is performing compared to other markets against the global money supply, M2. As always, if you haven't done so, subscribe to the channel, like the video, leave a comment, all highly appreciated. Let's dive in. Maybe let's start out with the additional charts I've brought along here today. So everybody probably knows the story. There's a lot of people around the internet and all over the news, etc., always telling you, yes, gold is the number one inflationary hedge. You need gold in order to be protected against inflation. You need to buy gold in order to protect your money. Your paper money is becoming worthless over time, so if you buy gold, you will be protected against this. There is a lot of truth in that. If you own gold, you own a physical asset. You can't be robbed of that asset unless there would be, for example, another wave of gold not being allowed ownership by civilians, by private people. But far apart from that, we really have to put it into perspective. Is it really performing against the global money supply M2, which I think is probably the most exact measurement of how much money is really in the system, and hence how much inflation is really taking place within a currency. And so I've prepared a chart, and it's a rather simple chart, and I think if we just take a look at it, it's very, very obvious what's going on here. Taking a look at how gold has performed over the years, so it is gold expressed in the M2 money supply. So going back to the 1980s, that's where basically gold had its one of the most significant all-time highs in previous times, and that's also where it had formed its high against the M2 money supply. From there on, things went downward, went south until around the 2000, when gold also probably then bottomed out from this long-term correction that started in the 1980s, and then it started an upward rise here until 2011, where gold formed a high around $1,900. From there on, it went back down, no new low formed, and we are going back up. So the interesting thing here at the moment for me is that the fact that everybody is claiming, gold has protected you, gold has performed so much better compared to other assets, protecting you from inflation, protecting you from the printing presses of the Fed, of the ECB, all the central banks that have been printing money over the last 20 years, and probably in an extended pace in the last 10, and especially in the last 5 years. Printing presses have been running hard, especially with the Fed pumping a lot of liquidity and producing a lot of inflation to the US dollar. But nevertheless, looking at this graph, we can clearly see that gold, even it has surpassed its all-time highs by significant margins. I mean, let's look back. 2011 all-time high around 1,920. Now currently price of gold around $3,700 an ounce, so a significant rise, but it has not been able to take out those highs when compared to M2 that we have formed in 2011. It's not I'm not putting this in perspective that gold hasn't performed well. It is putting it in perspective of how well gold has performed in terms of the abilities that people are attributing towards gold ownership, etc. And here I have to say, I have to come to the conclusion that things are not happening the way they should be happening, at least not how many people claim they are. So at the moment, it's not fulfilling its function here at all. So I would have at least expected this high to be taken out. So we are closing in on that high, but let's just take a look percentage-wise how much further we have to go here. So that's another around, let's say 22% to go. Would we be willing to go and take out the all-time highs compared to the M2 money supply? We need another 150% rise here. So basically, more than doubling the current price of gold. We will come to that in a second as well. To compare gold to other assets, especially the US stock market, the two largest indices, if we look at the NASDAQ has clearly been able to take out its old highs in the M2 supply here, dating back to the 2000s. It has taken out the highs from 21 significantly. We are running on all-time highs at the moment, so really what has outperformed inflation, what has been able to perform with M2 is the tech sector. And yeah, not as strong yet, but closing in on its all-time highs is the S&P 500. Also, it's going places, it's pushing up, and we are not far away from its all-time highs when expressed within M2. So it's another 9-10%, yeah, which with the current state of the market and what I'm still expecting in the indices to be happening in the future, that will easily be manageable. Of course, unless M2 would explode to a level where this would make it more difficult. But even those explosions that we have seen due to the excessive inflationary policies from the Fed and from other central banks over the last years, the S&P and the Nasdaq were able to keep up with that development, which is something that gold has not been able to do. So either gold will have to, crazy outperform now, which I'm not seeing, or it's simply not fulfilling its role the way it should be, or at least that people are attributing the role of gold. So that being said, I think it's just an interesting fact to keep in mind, because I think there are a lot of people are still being brainwashed by that idea. So I'm not expressing that it's a bad idea in general to be holding gold, but I'm expressing that it's not fulfilling the purpose in the way that people are really think that it is doing it. And yeah, the S&P and the Nasdaq have been doing a much better job at protecting your money from inflation and from the increasing M2 money supply than gold has over the last decades. So, but let's dive in. Let's take a look at gold. I've made some, significant, you could call them somewhat significant changes to the charts, although overall my overall expectation remains the same. Let's just go in here and take a look at the overall charts for them for a moment here. I'm still expecting the market at some point here to be topping out within wave 1. Yeah, I have an alternative scenario outlined now in the overall run that this could only be the wave 3. We will see another 4th wave and then a final run up to new all-time highs before we crash out. So this hasn't changed. Yeah, the way what has changed is the immediate outlook and how we're going to be getting there. Gold has been able to break out of this sideways structure here at the moment. So right now I'm expecting this to be running up higher here. I'm expecting another impulse to be forming with another 5-wave move, then a smaller 4th wave, and then a final run up to new all-time highs. Or alternatively, everything is going to be completed at this point here. Just to put everything in perspective, if we are looking at the overall dynamics of the move and the overall extensions that have already been hit here, so we are quite extended already in terms of the extensions that have been reached here. The market is very much so pushing its absolute limits. We have surpassed the 200% extension when we are projecting over the wave 3 and 4 here at the moment. So this is a lot. Usually the 100% extension would already be a very stretched move in a wave 5. So at the moment we are looking at well beyond that, and we could be reaching even higher here should gold be pushing on as expected here at the moment. So this is a very stretched move at the moment already, and also within the subwave structure we will have to stretch this move quite a lot to get to this zone here in the end. But it is manageable in the way that gold has been behaving over the last 2 weeks and months now. I have to expect that this further extension and this further parabolic movement will continue, because if we go back to the overall chart, I think it's quite clear that after the low that we formed here in November of 22, things now, the way they've developed, we are speaking about a very parabolic move here to the upside. The thing is, with those kind of structures, yes, they can continue much longer than you expect, but in the end, all those parabolic moves are going to break, and they will break hard. Just to catch up a little bit on Elliott Wave theory and the basics, there's this idea of an overthrow, underthrow theory. The more you push to the upside, the more this thing is going to come back rolling down at you once it crashes or once it is ready for a corrective move. So it still has time to go on and stretch this out. I'm expecting now levels above $4,000 here to finalize the move, and from there on the sell-off could be quite hard. But then I would be willing to take the chances in this area down here to go long again and see and for a final move to the upside. If you also take a look at the indicator charts here, of course we are very much so on the long-term indicators in the oversold area, overbought area, but things are still pushing to the upside. The MACD is not showing any signs of weakness. We are still pushing positive momentum. So things are still going well for the bulls here as well. We've maintained that structure. We had a little moment here on the 2-week where there was a slight chance of it crossing down on the MACD, and we also broke the positive momentum for once with one candle here, but there was nothing of significance coming to the downside here in terms of sell-offs. So we continued on to the upside. Now the weekly has crossed back up again. Yeah. We are still diverging on the MACD, so let's see where this leads us now. 4-day also pushing back up. Yeah, straight back to overbought territory. Also still a little divergence here. So this is something that could play out, yeah, but nevertheless, still with those structures, I'm still positive that we are still able to push on in this move. Otherwise, yeah, we would require a surprise breakdown basically. Yeah. And if we go on the really short term, on the shorter term time frames here, going down to the daily, yeah, pushed back up again. It's losing a little steam here, as you can see on the histogram on the MACD. Maybe something's coming in the near future, which could explain this wave 3-4 structure here that I'm expecting. That would be able to, yeah, that could play out on the daily chart here. Going to the 8-hour, for example, we are also clearly on the overbought side here at the moment, of course. It had crossed down. It's now coming back up again. Let's see if this breaks up again to the upside, but nothing of significance at the moment. Everything is looking strong. We are pushing. 4-hour pushed back up again. So basically, for now, what I'm watching for is now, how is this top going to be formed? Is it going to maintain this 4th wave expectation, or could this also already have been all of wave 3? This is something I have to keep an eye on now, but we still have ways to go. And also, if I'm going to, if you look at the projection of wave 3 here, for example, we still have enough, yeah, room to the upside. It will be stretched. There's no doubt. Yeah, it will be a stretched move, because usually, yeah, wave 3 targets would be in this area here, but in order to then reach the zone up here from the overall chart, we have to push on. So I wouldn't be surprised if we reach the 2168 extension here at 3987. It would be one of the legitimate targets for wave 3. So we're still having ways to go. Right now, imminently, we are probably just shy of touching the 1618 extension. I'm expecting a reaction there, and we will see. Then I'll also have to consider maybe wave 3 would find an earlier end. If this would be the case, then I would also have to adjust this target zone up here, because then it's very unlikely that it's going to be able to manage to get there. Would only be possible if we would see a massive extension within wave 5. Things we have seen over the past weeks and months within gold, that this is happening, but I'm not expecting this every time to reoccur here. So that's something we have to watch out, and maybe I will have to make adjustments to the target zone. But I'm quite certain that no matter what is going to be happening, especially no matter what's happening with the Fed this week, with the interest rate decision, that this area up here will have to force the market into a significant reaction in forms of a corrective counter move. And yeah, the downside is not going to be crazy, but it is significant. It would be around 20% haircut, which would be more than healthy for this if this wants to continue the rally. Because as I've shown before here on the overall chart, we just have to take a look. Then this parabolic breakout here, this is not going to be maintained for much longer. I just can't imagine that this is going to continue that way, because all those parabolic moves at some point, they break down, and they break down hard. And that's why I'm still expecting this. If this wants to continue over the next year or so, we need a midterm correction in the 20-30% range in order to basically calm down things a bit, build up new momentum, and then we have another chance at going long for another all-time high before the final top is going to be built in gold, which I'm still expecting overall to be happening. So that's my update. Thanks for watching. If you liked the video, leave a like, leave a comment, and see you next time.